Visa and Mastercard have become two of the largest businesses in the country by getting people to pay with cards instead of cash or check. In fact, they've become so successful that they're running out of room to grow in the US market. So should investors worry? Here's what to know. Not all payments can actually be made with cards. Things like insurance and many parts of healthcare often require other payment methods. But by one definition of the addressable opportunity, cards now account for 87% of US personal consumption expenditures, which is a measure of consumer spending. That's up from 52% in 2007, according to Bernstein. So what's the issue? While the dominance of cards has been great for Visa and Mastercard, it also means their growth is slowing. So what are the next big growth opportunities? To start, there's always the economy. As overall spending grows in the US, these companies stand to make more money. Another opportunity lies internationally, where consumer card payments make up a smaller portion of their addressable market. About 62% if you exclude China, even though that penetration has more than doubled from 28% in 2007. The overseas opportunity is attractive because other countries don't have the same credit and debit card cultures as the US. Even in developed markets like the UK, card infrastructure isn't as widespread. As more businesses start accepting cards, these markets have room for growth. There's also ample potential in emerging markets where you have lower card penetration, but also a rising middle class that's building wealth and growing into the banking ecosystem. But Visa and Mastercard face challenges in emerging markets that they didn't face when they were scaling up in the US. There's competition from new payment types that bypass the card networks. For example, in Brazil and India, the government supports popular options that let people make payments between bank accounts. In Kenya, there's a dominant service called M-Pesa that's phone-based. Other markets may never have the same levels of card penetration as the US. Another huge opportunity lies beyond the checkout point. When you think of Visa or Mastercard, you probably think of paying for something at a store or a restaurant or online, but Visa estimates that there's 185 trillion of money moving outside the checkout process. As it stands, most businesses don't pay each other by credit card, but Visa and Mastercard have virtual cards and other products that try to get in on this market. 185 trillion is a huge number, even bigger than world GDP. So it's a big opportunity, but it's also worth keeping in mind that many businesses and governments may be entrenched in the old way of doing things. This chart shows how Visa's commercial payments have gone from being 11% of volumes 5 years ago to 13% now, while Mastercard went from 15% to 16%. The companies are growing here, but Bernstein analysts say the progress has been more incremental. Visa and Mastercard have made major inroads with their value-added services. These are things like anti-fraud tools and marketing offerings for their financial services customers. Services now represent about a quarter of Visa's revenue and 39% of Mastercard's. But the Bernstein analysts say that this momentum is underappreciated by investors. Software companies tend to have higher valuation multiples, so if the companies start to get more respect from Wall Street for their services, that could help their stocks.